one and all present here. Today we are going to see about receivables management. First we have to know what is meant by receivables. It represents the amount owed to the firm as a result of sale of goods or services in the ordinary course of business. It's nothing but when the purchase has been made, when the sale has been made to the other person, the person has to make the payment when they sold the goods. They don't receive the cash. Only after some time they'll be able to receive the cash. So that is called as receivables. Receivables is also known as account receivables, trade receivables, customer receivables, or book debts. So always receivables are carried for the customers. The period of credit and the extent of receivables depends upon the credit policy followed by the firm. So next we are going to see about table of contents. That is, first one is introduction that you have already seen, and next one is cost of maintaining receivables. Third one is in cost of maintaining receivables we have the following cost, that is cost of financing receivables, cost of collection, and bad debts. Cost of maintaining receivables, it's like it is allowing the customers, means giving of funds for the customer use. The concern incurs all the cost of maintaining receivables. Allowing of credit to the customers means giving of funds for the customer use. So that is called as cost of maintaining receivables. We have the following cost. So cost of financing receivables, when the goods and services are provided on credit, that concerns the capital is allowed to be used by the customers. That is what we have already said. The goods has been sold to the customers without receiving the amount at the period of time. When the goods has been sold, they will be giving after a period of time, that is stipulated period of time, which has been specified by the company or the firm. The receivables are received from the funds supplied by the shareholders for the long-term financing or through retained earnings. So that point of time, they will be using the retained earnings for that cost. So the cost incurs some cost for collecting the funds which refinance receivables. Next one is cost of collection. Cost of collection is the proper collection of receivables is essential for receivables management. The customer who do not pay the money during the stipulated period of time, they have to send the reminders for the early payments. They have to remind them to make the payment at the proper time. Some persons may have to send for collecting these amount. In person, they have to go to the person and they have to remind them what they have to do, when they have to make the payment. So in cases legal recourse have to be taken for collecting receivables as they have not paid the amount. All these costs are known as collection cost, which concern is generally required to incur. And next one is bad debts. Some customers may fail to pay the amount due to them. Customers fail to pay, known as bad debts. Concerns may able to reduce the bad debts through efficient collection, that is making them to have the reminders and make them to make the early payments by giving offers, discount, and they can have a personal touch with the customers. If they have any issues, they can extend the period of time for collecting the bad debts. So this is one we have completed. Thank you.